Donald Trump has announced sweeping tariffs on imported goods from all countries, including close allies like the UK. The move, branded as America's Liberation Day, is set to take effect on April 2, 2025, and has already sparked global concerns. The tariffs, averaging around 15% and reaching over 50% for Chinese products, aim to close the US trade deficit and level the playing field for American manufacturers. However, the European Union has already signaled intentions to retaliate, and markets worldwide are reacting with unease. The White House stated that this bold economic shift has been in development for some time, but its sudden implementation is causing significant disruption. Wall Street saw a sharp downturn, with the S&P 500 dropping 4.6% and the tech-heavy Nasdaq falling 10.4%, marking their weakest performance in years. Analysts warn that rising import costs will likely feed into consumer inflation, especially since many American industries rely on foreign parts and materials. The auto sector is particularly vulnerable. By the end of 2024, a large portion of vehicles sold in the US depended on components from Mexico, Canada, China, and Germany. New tariffs now force manufacturers to either absorb the cost, pass it on to consumers, or attempt expensive and slow shifts in production. While companies like Ford and GM stockpile parts or seek alternate suppliers, the American Automotive Policy Council has warned that vehicle prices will inevitably rise. The energy sector is also bracing for impact. Although the US has made strides in energy independence, it still relies on foreign oil and critical infrastructure components. With tariffs now affecting energy imports, Brent crude prices have already risen, and the cost is expected to trickle down to US consumers. Power companies warn that tariffs on turbines and electrical components could drive up electricity bills, making modernization projects even costlier. Investors responded harshly. Tesla shares tumble, partly due to China concerns and Elon Musk's political visibility, while Nvidia lost over 19%. Even tech giants like Amazon and Microsoft saw volatile swings, as tariffs threatened to raise production costs and squeeze profit margins. In contrast, some firms like Rocket saw gains, announcing major acquisitions during the turmoil. As the country enters this new economic chapter, concerns mount over whether the tariffs meant to strengthen American industry might end up harming it instead. Buffett's Berkshire Hathaway helped lift the S&P 500, which rose 1.2%. Newsmax shares surged 735% on their first volatile trading day. While the Dow gained 417.86 points, the Nasdaq dropped 237.0. Investors are waiting for clarity on Trump's new tariff policies, which have introduced significant financial uncertainty. Domestically, Trump's declaration of April 2 as Independence Day, meant to reduce foreign product reliance, sparked political backlash. Many Democrats and some Republicans argue the tariffs could backfire, harming domestic producers and consumers. Treasury Secretary Scott Bessent defended the tariffs, saying they target unfair foreign policies, but economists warn they'll likely increase prices for Americans. A New York Times piece titled, "Trump's Independence Day Turns into Wall Street's Nightmare," noted that protectionist moves historically hurt growth. US exporters could face retaliatory tariffs, threatening sectors like agriculture, aviation, and tech. The EU, China, and Canada have already signaled they'll respond. Wall Street experts warned of rising recession risks if tariffs are fully implemented. Morgan Stanley estimates the risk above 35%. Investors are flocking to bonds and gold. The 10-year Treasury yield fell to 4.21%, and gold prices hit record highs. Meanwhile, the dollar index has dropped 4% this year. Global markets reacted negatively. Japan's Nikkei and Korea's KOSPI fell sharply, and France's CAC 40 dropped 1.6%. Protectionism may force multinationals to overhaul supply chains, potentially raising prices and disrupting employment. Consumer prices across sectors, autos, electronics, food, are expected to rise, curbing demand. A Bloomberg report warned that tariffs could cost US consumers billions and reduce spending. Companies may cut production or profits will shrink. Trump maintains that tariffs will boost American industry, but rebuilding domestic capacity takes time. Agricultural states fear retaliation, especially if China or the EU targets US farm exports. A repeat of the 2018-2019 trade war could hit farmers hard. The renewable energy sector may also suffer, as many clean energy components come from abroad. Domestic production of these alternatives isn't immediately feasible. Diplomatically, even US allies are alarmed. Long-standing trade partners like Canada and the EU warn that escalating tariffs could fracture economic ties. Yet the White House remains firm. President Trump will not delay this move, said a spokesperson on April 2. Financial institutions responded swiftly. Goldman Sachs cut its S&P 500 year-end forecast, while UBS and Barclays also revised growth estimates downward. The Federal Reserve may struggle to balance inflation control with avoiding a recession. Trump argues the shift benefits domestic producers, but short-term pain is inevitable. Manufacturing ramp-up and infrastructure expansion are slow processes. Consumers and exporters may feel the burden long before any benefits emerge. Economists warn this strategy resembles the Great Depression-era trade policies, which worsened global recessions. Dependence on foreign imports, especially in autos, energy, and oil, remains high. Though Trump frames tariffs as a path to self-reliance, near-term indicators suggest economic pain. Retailers and car dealers are adjusting prices or depleting stock to manage costs. But destocking is temporary, and prolonged tariffs could reduce US market appeal to global investors. On April 3, a UK firm raised risk premiums on US securities. Tokyo and Frankfurt investment houses echoed caution. With product lists still unclear, businesses face uncertainty, widely seen as the enemy of growth. Drops in the S&P 500 and Nasdaq reflect long-term investor anxiety. All eyes now turn to post-April 6 trade data. If imports fall and inflation rises, job losses may follow. Though unemployment is currently low, consumption contraction could reverse that. Trump's policies may alienate voters if they begin to feel real-world consequences. Key sectors like autos, electricity, and fuel will be hit hardest. Rising import costs mean more expensive cars, energy bills, and fuel prices. Wall Street's recession warnings are growing louder. Critics argue the US may be sabotaging its own economy. Still, Trump remains resolute, framing tariffs as a step toward industrial revival and fairness in global trade.